At Finance, we seek out the hidden gems in cryptocurrency. We will tailor your portfolio to work for you. Are you ready to transition your investments from traditional markets to cryptocurrency? Are your coins staked and earning interest? Are you overwhelmed with all the jargon in crypto? Is your portfolio underperforming and you want to reposition into consistent winning blue chip coins and viable projects? Do you feel like you missed out on DeFi, Metaverse, and NFTs? Here at Finance, we provide you with the data, skills, and tools you need to stay on top of the digital asset market. Finance, we are the future of crypto.
What's up, everybody? Welcome back to another episode of Vibra Live. My name is Adam. Today, got a special guest. Really appreciate him taking out the time in his day to come talk some crypto, spit some alpha with us. What's up, Axis?
What's going on, everybody? Thank you for inviting me, Adam. Appreciate it. Haven't seen you since Vegas. Hope everything's been doing well.
Yeah, bro. We got some exciting stuff in the markets. We got the Highest of Stakes movie coming out. You know, so many exciting things to talk about. So hopefully we can pinpoint some of those things and get some people excited for the bull run that's in the near future.
I would say it's happening, man. We're in phase one of the bull. This is the boring phase where we've made the lows and now we just have to let the structure build in the price charts and you know, hopefully we get maybe like a Blackrock or somebody to start buying all our bags.
It's inevitable. You can just feel it. You know, I really hammer home like the institutional stuff and been paying attention to what Fidelity and some of the big boys are doing, and they're all building out their crypto platforms. It's almost like they need to get it out and get the ball rolling and show us that it's safe, so we can then come take part. Because institutional staking is good to go. You can use it on Hedera. There's plenty of companies out there that if you're a hedge fund, you can go talk to Hex Trust and go use DeFi just like us, except people just aren't, it's not shilled to the masses. So it's all coming, and real DeFi, I think, is going to be maybe a new narrative or a narrative that comes back again, kind of like the Uniswap summer in 2020, because I think it's only inevitable that when people eventually come into DeFi with liquid staking and these other protocols, they're going to start looking elsewhere. And I think you inevitably find HEX. It's just a matter of time.
Mm-hmm. And I think so with all that, I think that we're setting up for it's like, I just want to set the table and basically explain how awesome of a setup this is. So, you know, we talked a little bit before we went live just about what's going on with different elements of the economy at large. So, you know, starting with the dollar, the dollar currency index is breaking down, and it's been breaking down out of a blow off top since last fall and end of year. And it's just having a hard time going up. So this is like the dollar showing weakness in the face of other nation states abandoning U.S. sovereign debt. And at the same time, the federal funds rate is, you know, going up, you know, by the month. Now, interest rates are really high, and all these loans are out there for commercial real estate, and commercial real estate's no longer an attractive thing because the economy is decentralizing itself in the same way that the internet brought e-commerce and that completely shifted the economy in a new direction. Now we're having no longer a need for all that commercial space. So somebody's going to take the hit on all that development that occurred. You know, and as you were saying beforehand, we have even articles pointing to the fact that there's lots of vacancies and stuff, and someone's going to take the hit. And so, you know, zooming out, looking at that, you know, you look at these charts and it's basically showing a good opportunity here for a setup for bigger players to basically leave smaller regional banks with the bill. And this wouldn't be like tomorrow, but it could be in the next 2 to 3 years where we see more bullish action on the S&P. We see more bullish price action in precious metals. Perhaps even the Federal Reserve starts money printing again to keep up with their interest payment obligations to bondholders. At the same time, crypto could go into a little secular bull market leading into next year, middle of next year. We don't know exactly the timing, but we know that things are looking pretty good for at least on the Bitcoin front right now. So you have all these moving pieces that are coming in the face of also some resolution with the Xrp case, and where, you know, that has now set the precedent where XRP not being considered a security completely changes the game on the regulatory front, and opens it wide open for all these new cryptocurrencies or previously under the gun cryptocurrencies to be seen more of in a legitimate light. And so it's really going to set up an interesting conversation, because there's never been this much volatility in the economic foundation before, and there's never been as much opportunity. And so I think that's kind of where I want to gear the conversation today, is just in where all that opportunity kind of is.
Yeah, 100%. Now, can you share your screen on here? So if you want to pull some charts up.
Yep, I will. I'll get it all set up while we're going.
Okay, perfect. So yeah, I was talking about this on stream last night, just kind of doing some digging, because if you guys don't know, I was in commercial real estate for 9 years, from 2008 to right around 2017. And I was there for the collapse in 08. I saw everything play out, and I still talk to people in the industry, and they said it's getting bad. The commercial market, especially for office spaces, and like your local markets, everybody has their local insurance agent, their local dentist. You have your your investment advisor. Everybody's just renting space, but they're all consolidating, and the vacancy rate is just going greater and greater and greater. And people are trying to downsize and refinance, and it's only a matter of time. And when you see that the Federal Reserve hires BlackRock for their commercial mortgage-backed security program, it's like, wow. So they funded pretty much the whole scam of the mortgage-backed securities. When you're building developments on speculation and half the houses aren't even built, and you're assuming that they're up and running and they're rented out producing income, like that scam can only hold up for so long. And
we saw the same thing in China, did we not? I think it was like they built these like ghost cities. Like they developed in so far ahead in the future that there wasn't anything on the receiving end, and there was no income coming from those things. And that, I don't think that ended well for them either. They're probably still printing money to make up for the loss.
Yeah, and that's what happens when you have a debt-based economy, and you have to issue new debt to grow the economy. I mean, it's a really a catch-22. And just to see, this article too here about how Wall Street bets really screwed over their ETF. Oh no, sorry, this is Silvergate here. Sorry, this is so this in 2021, Wall Street bets, when they pumped up silver to $30, they had to pretty much manipulate the market to pull it back down to $25. So if that had kept going, it just shows you that BlackRock is not this almighty powerful company. Yeah, they control $10 trillion in assets, but they don't have that liquid. They're, from what I hear, the mortgage-backed securities is a big problem. And when you see articles saying that they're bullish on it and there's stability, this was the middle of last year. Well, look what happened a year later. I'll bet you they're down 3 times what they were. If it was 8% last year, I'll bet you it's mid-20s now.
Wow.
So, the writing is on the wall, and this is all going to turn into the small and the medium, your local banks that write the loans for these office buildings that are vacant. So I think this, I heard there was over 700 banks running at an insolvency since the end of last year. So when you see that and you think to yourself, all right, this is just a ticking time bomb. And when this starts to play out, there's going to be a mass consolidation, and the bigger banks are just going to get bigger and more powerful, and just a consolidation and to basically federalize the banking system.
Yeah, and then what's the real downside if people go bankrupt? There's none. It's just the assets get consolidated under a bigger umbrella, and then you get slapped on the wrist. There's no like jail time. There's no like consequences to doing this in the economy, and so it's a lot of waste, really, is what it looks like to me. But at the end, who does well out of all this? It's the guys who are speculating on the things that are going to outperform all of the chaos, right? That's where the interest is for us in cryptocurrencies. Like, if they're going to continue, when I say the Fed is going to continue to cause havoc in the ecosystem, in the economy, they're going to have to debase the currency. So they're going to have to continue to devalue the dollar by stealing your purchasing power away. whether you want to or not. That's just an inevitability. You know, the dollar's down 99% since 1913 or whatever, right? Ever since we got off the gold standard, it's just gotten worse. So, you know, as that goes down, you know, and we measure the world in dollars, you got to find the thing that's going to overperform both that debasement of purchasing power and like the inflated prices of ever growing demand and increasing of the population. And so you're competing against all these metrics, right, in real time. And what's the fastest horse in all this is it's cryptocurrency, right? And so I think that's why your big funds like your BlackRock are looking toward, you know, and why you're seeing things come up now about like the BlackRock ETFs for Bitcoin and Fidelity and these other big companies. They're filing for Bitcoin ETFs is because there is an effort or an attempt right now that they know that their best bet of staying solvent and being prosperous going forward is to get a ton of the Bitcoin supply as cheap as they can, and then sell it off to the mid to small guys at a 100% move or 200% move higher, and they could rinse and repeat that game for years to come. And just giving them an ETF gives them even that much more power over the chart.
Yep. And then like a step further too is like I've been talking about the institutional stuff, like with MetaMask Institutional that went live with 17,000 clients, I believe in March of this year, and HEX Trust, the stuff that they're doing. These corporations, these banks, these hedge funds, they can legally stake. They can take, say, Hedera, for example, stake it through Hedera Institutional, get 6.5% yield. And I think they're trying to set up platforms where they're going to sell to retail, like, you know, a derivative of Hedera. So they're going to have the main asset staked, earning the 6.5%, but selling you a derivative that's worth 1-to-1, but it's worth nothing outside of their system. So they're going to be able to capitalize on the yield and the price appreciation while keeping their customers happy. And they'll be able to, that way they can slowly increase their bags and start to corner the markets on all these other projects like they're doing with Bitcoin.
Yeah, and I think that that's just going to expand out even further, right? So if they're doing it with one coin, Hedera, then this is going to be it's going to work laterally, so they can basically adapt whatever coin has the most network effect behind it and apply it in the same way. And I think inevitably they will set floors on these price charts. Don't matter if it's a centralized or decentralized asset. They will control the supply from the lows, create floors, run it up, you know, get a bull market maybe, and don't even need the bull market. They can run it inside of like, because these companies are so efficient. They're good at working within like a 10%, 20% range, and they can make money at that as long as there's enough volume flowing through it. And so that's what's exciting to me, you know, looking at all this shifting, like zooming back out and seeing like, I don't care if it's Bitcoin or if it's yielding from Hedera or if it's yielding from the HEX contract. They're all different ways to get in on volatile assets that can overperform all these different economic metrics we're talking about that are hurting the economy. That people can get their, when I say people, institutions can get their claws into to give them more power back. And where they're rather than fighting the problem with the tools that are failing them, they're going to try to pick up the tools or create new sets of tools that can work unilaterally with them, and then slowly or quickly, depending on the phase of the cycle, more and more of the economic energy will shift out of legacy assets and into that ecosystem. Because look at, if you can put up, here's a simple one, if you can put up 3 stable coins against each other in a pool and just earn like 4 to 5% yield on that, that's doing just as good to meet their quotas as anything else in the real economy. And so that's really what's going to bring liquidity into cryptocurrency this cycle, is the bringing in, creating new stable coins and then pairing them against each other and then just like winning on the arbitration of those. And then all that new dollar value is going to back in DeFi, really, is what it's going to do. It'll back the centralized exchanges as well, but that's what's exciting, is that's where the new money will come from. It's from these funds that need to get that consistent 4 to 6%.
Yep. And that's nothing in crypto. These protocols want to pay us 6-8% so we can hold the network or hold coins to keep the network safe and decentralized. So that's not a problem at all. And it's like these articles like this, it's like, if this doesn't scream desperation, when these banks are rushing in and dumping 70% in crypto at all times, 30% minimum stable coins, this is desperation. This is the last move they can make. They've tried to manipulate everything. I mean, the amount of fines these banks have paid over the last 10 years is astronomical. So I think crypto is like the win-win for everybody. And inevitably, money is going to pour into the big ETFs, but it will find DeFi and it will find HEX and it will find the Richard Hart ecosystem. And we're so lucky to be here now this early and be able to kind of spot these trends and see where this is all going. And with even in Europe, all the MiCA laws that are coming out and the DeFi regulations. I was talking about on stream a week or so ago that the regulators in the UK were meeting with Binance, A16, Gemini, and all the biggest players out there so they could make sure to set rules that would allow businesses to thrive, not the polar opposite of what we're doing here in the United States. So I think we're going to be the last ones. We're just kind of sitting around seeing these other countries adopt stuff, what works, what doesn't work, and then we'll be the last ones to come around, but we'll do it correctly. And I think by the time it gets to us, it's going to have to be some kind of on-chain legislation, or I don't know what it's going to be, because you can't legislate crypto. It moves too fast that in 2-3 years, the laws you enacted now would be irrelevant. And it's just the same problem over and over. So there's a lot of problems that we need to solve for mass adoption, but it's happening, it's coming. And man, I'm just so happy that we're here now.
Yeah, and I was thinking about how there's probably different layers of the U.S. government fighting over the correct path forward. And let's say the military or the Fed, they don't want crypto. They couldn't allow crypto to just explode and go infinite forever on the basis that other countries get their power back through that decentralized principle. So if some random Bitcoin holder in Africa, in a very poor country, held it at $100 and had 10,000 of these things, and then the price goes to 60,000, that totally changes the dynamic of power. And if there's not just one guy there, if there's thousands or hundreds of thousands of people distributed all across the globe that are benefiting from the price appreciation of these assets, it completely shifts the power dynamic away from one centralized bank in the Fed to economic prosperity across the globe, which gives different, it just totally changes the power dynamic. So there's that. And then there's the whole smoke and mirrors of I forget what it was called, but how this current U.S. administration basically came after the entire crypto industry last year and attacked it, and basically wanted to. They used things like Luna, Celsius, and FTX as a scapegoat to say we need more restrictive measures put in place. But then that was driving to innovation outside of the U.S. So that pisses off companies like Blackrock and Fidelity and the big banks, because they know that they're killing a golden goose or they're slowing down innovation. And then that forces them to have to move into foreign markets to try to get exposure to this stuff. And so eventually you get all these different huge players fighting over what inevitably ends up happening, which is that crypto is going to win and everyone will win because crypto is going to win. And so it's just inevitable. Bitcoin is inevitable. It's amazing that it got to this point, because it very well could have been killed, pre-2016, but it didn't. And it makes you wonder, who's behind it. And obviously some really smart people saw the future ahead of out of the inflation problem and the currency debasement problem by creating that immutable ledger that can prove transactions, improve supply, things that otherwise can be controlled and manipulated in the same way the silver price was, going back to the Wall Street bets stuff that went on a few years ago. And so I think eventually everyone gets awakened to this, but by the time the world is woken up to all this, the opportunity is going to be not gone, but it will not be that potential to make 100x or 1000x your returns in a few years, because all of the volatility will be snuffed out. And one thing I like to talk about with this on this point is you know, once let's use an example of what's happening right now with Grayscale Bitcoin Trust. So like the Grayscale Bitcoin is still trading at like a 30% discount relative to the spot market. And that company holds 600,000 plus Bitcoins, and they're in a lot of trouble and they're under a lot of heat right now because they're going bankrupt from all these different layers of their organization that just isn't making money in this environment. And if you're a huge centralized bank, you may smell blood and want to try to figure out how can we, you know, end them and make their demise so that we could absorb all of that asset at those prices, like an amount of Bitcoin that you'd otherwise never going to be able to get at this price, right? And so, you know, with like the digital currency group and like what was going on with Galaxy Digital Holdings, or no, it was the miner out of Greenland or wherever it was, Iceland, I think it was. There was like a big mining company, I forget the name of them, but they went bankrupt, and they were a huge Ethereum mining firm. And they had bets in everywhere with like Luna and Celsius and stuff like that. And there was all these like commingling of funds. And so every time that something broke, someone ended up benefiting by acquiring all those assets. And I just think that this is all setting up for an attempted like liquidation of all these old crypto companies that had majority of the supply, to try to get it in the hands of these other guys so that they can once again control the crypto markets. Okay, and so if we're going to get that world where, you know, Bitcoin is completely controlled and held inside of a price range, I don't pick a price range, let's say 30 to 60 grand for 15 years, and it's unlikely, but I'm just saying, let's say that does occur, where a huge central bank acquires like a million Bitcoins, or maybe like a cohort of them. Maybe there's 3 or 4 central banks that gets like a million Bitcoins. They could effectively keep the price of Bitcoin trapped forever. And so like in a world where that does become a reality, and knowing that Ethereum has already kind of got connections to the World Economic Forum, and it's like, well, where are we going to go next? It's going to go into true DeFi, because that'll be the last opportunity, the last bastion of hope in the face of all of this repeating of what happened before in the old market, the legacy market, right? So just want to hear kind of your thoughts on that.
Yeah, no, I'm 100%, and that's why, like, I really am excited. As much as people hate XRP and it's the banker's coin, like with what they're building with the XRP ledger and the decentralized liquidity pools that are going to actually enable real capital to come in and not have to suffer impermanent loss. As the pools grow, the yields are going to grow, so the pools are incentivized to grow. It's not the opposite that we're used to. And like with liquid staking, the stuff that on Saucerswap, which is one of the dexes on Hedera that I was in the pre-sale in since day one, and I like to compare it to PulseX because I think it's launched in the middle of a bear market. It's very similar. You know, the tokenomics are a little bit different, but all in all, it's very similar to PulseX, and I just see the opportunity for these guys. It's coming. It's so close, and with Hart's law in our ecosystem. Like, I get asked all the time, like, you know, what should I buy? Hex? Should I buy Pulsechain? What should I do? That's how everybody just split it up. You got to look at it as one ecosystem in 4 coins. And if you want to look at incentive, okay, but for now, just look at it as 2 hexes and Pulse and PulseX, and just put 25% of your money across the board. So I think they're all gonna pump. They're gonna trade between ranges, but no one's gonna know when is PulseX gonna be trading at 3 to 1. When's it gonna be 2 to 1? Like that. That makes, like you were saying, with them being able to control the supply and just keep it range bound and being able to profit. Like, we now can kind of see where Pulse and PulseX are going to be range bound. So the opportunities for us now, like, I can't wait to see what you think about incentive. Like, because I'm kind of worried about the price of it dropping down to a couple bucks here in the next month or so.
Mm-hmm.
I'm curious to see your thoughts on that, but just, yeah, bro, overall, like, just where the markets are going with the technology that's being built, like, it's inevitable. And TradFi, they're stuck right now. There's no more tricks up their sleeve. Like, it's all bullshit. It doesn't work. And crypto's the only way out that they have. Everything else is falling apart around them, and crypto's just right there, ripe for the taking. And Genesis or Grayscale, and their DCG, they owe Gemini $1 billion from the collapse of their loan programs. So there's a lot, I think, still going on behind the scenes. These companies aren't as whole as they're made out to be in the mainstream. So I think you're 100% right that something's going to happen with that Grayscale trust. If it gets handed over to Fidelity and they just get crypto handed to them on a silver platter, you could just see something like that happen. I think that the premium, it's just
these companies, these huge organizations, like they're not dumb, and they're ran by like hundreds or thousands of people. They're looking for opportunities like this, and so, you know, I'm torn because like it's almost like it has to happen. Just with like the setup that we're in, it almost seems like it has to happen where Bitcoin, we have to basically sacrifice Bitcoin. And I actually came to this conclusion driving in the car a couple years ago. I think it was 2021, and I was like, when I was really no, it was 2020, the end of the year, when around big payday for HEX, and I was really struggling with the thought of like, well, am I okay with like if Richard Hart is the OA if he becomes a trillionaire? Like first that was the question that, and I was like, you know, am I okay with that? I mean, I guess I kind of have to be, and then I realized like if and the only way this is going to work is if we sacrificed Bitcoin by letting institutions take over and letting them have their way with it, and that's where we would get our liquidity from originally. I couldn't find a way out of it. Like I just, it made me sad because it was like, you know, it wasn't what my Bitcoin maxi mentality wanted to hear, right? So I had to like change my worldview of like what Bitcoin would be. Do I think Bitcoin could be $1 million one day? Yeah, I do. But do I think that I don't know the time frame? Yes, because there's so much money that can be made on the way to just 100K Bitcoin by these big funds. You know, and it doesn't take a lot of money for them. You know, $1 trillion is a lot of money. And if they pump $4 billion, let's say, which is like, what is that, like 4%? No, it'd be 0.4%, I think. $4 billion of $1 trillion. And anyway, if you pump 4 billion into Bitcoin, it does pump the price like $3,000 to $4,000. So that's like how much it takes to move the price around right now. And as the price goes higher, there's less Bitcoins for sale potentially on that price expansion near the all-time high. But you got to get through a tremendous amount of sell pressure on the way there. So you could be trading, you know, $100 billion, $200 billion on the way up, on the way back down from that 60K level. And there's like a lot of like liquidity that can get sloshed around in there that big funds can use to cover their ass on what they're losing on, like we were talking earlier in the stream, on the larger economy. So again, I look at this as like DeFi is our only way forward in terms of what the regular Joe like me is going to be able to do to be successful in this space. Like I can't buy 100 Bitcoins anymore. It's like way out of my price range. And I don't want to leverage trade because it's a loser's game. It's always stacked in the house's favor. And so the only thing I have left is I can accumulate DeFi on where it's got low liquidity, where once some smart fund manager figures it out, they'll bring in $1 billion into HEX and it'll pump the price to $10, and it'll take $1 to $2 HEX before big wallets really start handing over enough of the supply for them to even begin to think about controlling the HEX market. So it's a one-way asymmetrical bet that like the DeFi is where it's going to be in the next 1 to 2 cycles.
Mm-hmm. And bro, I 100% agree with you. And because like the stuff I was telling you about with Hedera, with their institutional staking platform, it's liquid staking. So they can lock that up, they can earn the yield and still be able to trade, you know, that liquidity. It's not just stuck like a HEX stake where you're locked up and you can't do anything until your stake ends. With liquid staking, it changes the game. And I think until legislation is out, the floodgates I don't think can open, but the writing is on the wall, guys. Like Axe is now the third person now. Rags, we've all been hammering it home now that, you know, it's just a matter of time. And DeFi, real DeFi, will be, I think, another narrative, and it will be sought after very shortly, whether it's when ETH flips Bitcoin or somewhere down the road, but inevitably people are going to want to look and for places that pay you yield and without admin keys. And I just think we have so much upside. And you're right, when it's sad that all my friends now that won't look at HEX are going to be calling me when it's at 25 cents, at 50 cents, wanting to buy it again. And they're going to get wrecked again and not understand, oh, crypto's a scam. Well, it's the second time now where I got my ass handed to me. It's like, you didn't listen. You did what you wanted. You bought the top again. And, it's insanity.
I had a friend like that. So when I got into mining in 2017, he's a friend from when we were kids, and he saw me building the facility out. I brought him over there, showed him what it was all about, talked to him about crypto for years. I think a lot of it went over his head, and he's just uninterested because he didn't see what I saw in it. And then it didn't matter what I did to get him to look into HEX or Bitcoin or whatever. He didn't partake. But then at $67,600, he decided to purchase some Bitcoin. I'm like, the hell? You literally just bought the top, dude. I just got done selling my Bitcoin mine, and you're fucking buying spot Bitcoin at $67,000.
It's bad. It sucks, bro. You could just, it's gonna happen again and again, and it's just, that's the herd mentality. It's like, you hear most stuff when you hear about it, if it's not something that you're actively into, it's way too late by the time it's coming off onto your radar.
That's why whenever I see things come up on like Twitter, name meme coin XYZ or AI coin or whatever it's going to be, by the time I see it on Twitter, not even gonna look at it, because it's like, if people are showing it to me, it's too late. Like, if I didn't find it on my own, usually it's too late. It's just the way it is, man. Like, you're gonna be somebody else's. You're gonna come in after somebody else, and you're gonna pump it up a little bit more so they can sell the next top. And it's just, that doesn't work. That doesn't work for me personally. I'd rather buy something that I know has like utility. And if Hedera is one of those things that has liquid staking, and I'm curious to hear your thoughts on like HSIs or the Hedron, or like that's in its own form of like kind of like liquid staking. I don't think that the market is pricing that stuff right now. And I think that once, like, let's say the hexes are trading at 25 cents or 50 cents, that all those other derivatives and perpetuals are going to like actually start to gain traction and market value, just because they'll be the cheapest thing and the lowest liquidity. So they will rubber band or snap back the hardest to try to track hex price at some point. So like, there may become a point. I know people were getting HSIs for like 85% off in my group. They were just killing it in the auctions. And I think those guys are going to do really well. And I think there's opportunity all over it. So I don't know enough about Hedera, but I'm curious to know, like, do they do the no admin keys thing or in those pools, or how does that work?
So, Saucerswap is, let me see, I'll pull up here. It's the main deck. So they had their pre-sale last, I want to say it was in January or February of 2022, and it launched the end of last summer, and you had to buy NFTs to get into it. And it's completely governed by the NFT holders. So if you bought all three of them, you got a set, you can vote in the DAO, and everything is up for vote in the community. They have staking, which it kills me to hear all these people say that, oh, PulseX staking, as soon as staking is out, the price is going to moon. It's like, it's not going to affect the price at all.
That's not how it works, guys. So like, let's just make this very clear right now. No narrative, including a Richard Hart stream, is going to change what's happening on the Pulsechain ecosystem. The only thing that's going to change that is when big money comes in and going to pump and make green candles. That's what happened in the beginning. Some on the low liquidity, somebody came in and pumped the shit out of that ecosystem, and then you had $100 million trapped on a bridge trying to get in, FOMOing in at higher and higher prices on the way to the peak. And if you guys want to see price performance out of the ecosystem, you're going to have to watch things like Metcalfe's law, like network adoption, on-chain volumes, on-chain TVL, volume, stuff like that. That's going to actually give you signal that that's coming. And it's not going to come from, it's going to be a slow and organic move. I feel it's going to be one of those things where like the highest of stakes is going to launch. More people are going to become aware of of the ecosystem, and then they may not act right away. But then once the awareness is starting to lighten up, then a big whale can come in, or a group of whales can come in and start moving the price chart. And then perhaps that's enough to gain the traction we need. And with any luck, we'll get a move on Bitcoin or ETH in the meantime to help propel us even higher, right? Because it's better if the whole ecosystem works in concert. And we're a little bit away from the moment that I'm waiting for the most, which is when DeFi decouples away from the mainstay cryptos. Because at some point, the opportunity and the volatility is going to be sucked out of Bitcoin and ETH because of the reasons we outlined earlier. And when that occurs, we're going to really need the market to mature and understand that the only other thing we have that can actually move still is DeFi, right? And that's when I see the potential for DeFi to decouple away from the rest of the market. But this is going to be with the tailwinds of all these new monies being printed from the Fed too, right? And the reason why they will get printed is because the Fed is at all-time high in terms of what they need to pay out on a monthly basis to bondholders. Like they couldn't even tax the entire world, or they couldn't tax the U.S. citizens enough to pay the debt that they owe on the bond yields. That's crazy. So they're going to have to print it, or the whole country goes into default, right? So that this is like quickly steamrolling toward us inevitable future where crypto is the only way out of the mess.
Yep. And like, yeah, bro, that's so, like, a lot of people don't understand too. Like, I'm fortunate enough where I get to talk to a lot of wealthy individuals that are a lot older than me, that have a lot more life experience than me. And when I call them excited about crypto or whatever, they're so conservative. They're like, let me think about it. I'm like, what do you mean think about it? Like, this is the opportunity of a lifetime. Like, they have this partnership, they have this going. It's like, are you kidding me? Think about it. It's like, these guys don't just act on impulse. They're extremely conservative. And like, almost the wealthier they are, the more scared they are of taxes, the more scared they are of doing something wrong. And the more they'll just wait until there's legislation, wait until it's okay, wait until it's not a gray area. They don't have to do anything. When you're at that level, you don't need to take risks. You're already set up for life. It's about preserving your wealth. So you don't need to go jump into this risky asset class that's not even legal in their eyes yet. So it takes time. And I think when legislation happens and that narrative is no longer there, where, it's illegal.
Also, when the rails are built, right? So when it's easier for them, they don't have to think about self-custody or anything. When that stuff's in place, it gives those people more comfort knowing that they can invest with a company that's like going to custody their funds for them, that they trust. And again, like you're right, they don't need to jump in at the lows to do well. They could jump in at $50,000 Bitcoin when it goes to 60 grand and be happy, right? They're cool with that. And that's actually what creates the biggest jumps in the price chart. Those big candles and price expansion is all of the multimillionaire and billionaires coming in around the same period of time when it's socially acceptable again.
Exactly, bro. You're spot on. And like, so yeah, I would wrap up with like Hedera. Like, I just use Saucerswap as like a good comparison. Like, when I look at PulseX and I see the volume down at like 1.4 million, I'm like, oh my God, what happened? And then I come to Saucerswap and see that their volume fell 40% overnight too. So it wasn't just native to PulseX. It's across the ecosystem that we're seeing, just these numbers just falling off of a cliff. So it's not just a problem with Pulsechain, with 100%. Richard Hart. It's across the ecosystem. So guys, don't panic. Like, this is all par for the course. And this, I think they honestly wanted Bitcoin down at 10K. Richard was 100% right. That's what ideally where they wanted it. But like, I just think back to like 2018, 19, when I was really getting back into crypto, and there was no such thing as diamond hands. It didn't exist back then. It was like the fear legislation was killing everything in India, in China. It was getting banned. Stable coins were going to be banned. That was like the fear narrative. So now it's a whole different narrative, a whole different world we're living in. In just 4 years, how much has changed? And I think that in 2025, 2026, once there is legislation, I mean, it's just money's gonna pour in to the asset class. But then I think, like, is the smart money gonna front run this? How can they miss this opportunity and not get ahead? So is this cycle gonna come early? It's like
Yeah.
there's so much that you could just keep like going down different rabbit holes and drawing these different conclusions, and they're all logical. You can make a great argument for each case. And that's why I think it's also important to listen to people with different points of view and different takes on stuff. So you're not just listening to these 10,000x moon boys. You're listening to people that will tell you, conservatively or not give it to you with the moon talk.
Yeah, and like you were saying earlier, it's all going to happen at once. Like there is like a threshold that gets crossed where like, okay, this is the end trade now, and I don't know what thing's going to create it. I just know that it's coming, and you can see it in the headlines. You can see it in the filings. You could see it in the regulatory front. And so like it's basically like a ticking time bomb at this point. Like, so DCAing in now is probably like the safest bet. Like the highest risk to reward is right now, and it hurts because like myself and many others, we've been DCAing in for the last year, and so it's like, well, now is the best time to DCA in, but it's like, how much more can you part with, right? In terms of like daily spend money or like bill money and stuff like that. And so, but I just say now is the time to grind, because we're looking forward 2 years. Like these are going to be the times that are remembered in terms of what you could buy, especially on things like eHEX, because that thing went from, 13 cents a few months ago, and everybody was knocking down the front door to get in. I mean, there was like a Genesis ETH whale buying $1,000 racks of hex at 4 cents, 5 cents, 8 cents, back at 3 cents on the way down. This guy was like, I don't know who he was, but on the chain you could see him buying $1,000 ETH buys of hex. Now he has hundreds of millions of hex, and that was just one guy with conviction on the way up. And so at that time, there was so many other people calling a lot of hexicans, wondering like, how can I bring in 1 million, 2 million? One guy sitting on 20 million, I heard, that wanted to bring in. And whatever happened to all that, in the face of all that downside and that liquidity pull on the ETH side? Well, it really, what that was a distribution of funds. So you took an asset that was one asset that was like loved and cherished, and then you took its value and you divided it by 4. So now that you had to just like dilute and distribute that money across 4 assets now. And so like that's why in the beginning, when Adam was talking about which one to buy in the RH ecosystem, well, you should be buying like equal percentages of all of them. And if you're like me, I'm a little more biased. I think that for me, it's just hex personally. Like I think that Pulse and PulseX can do amazing 100, 200, 500x potentially over the next few years, on a long enough time frame, for sure. Granted that you get Metcalfe's law and adoption and everything to work out in your favor, but at the core of everything is like the way that the hex yield is set up, and like that T-shares. So like on a max length stake right now, I think you could make like 30-ish% year over year. And if the rest of the user supply was staked tomorrow, that would only drop the yield in half. So assuming that the OA never stakes more to keep that incentive there for the ecosystem to continue to grow, this thing's going to be paying out 20% in the worst case scenario where all hex is staked, meaning no hex could be bought off market because it's all freaking staked, right? So then the price goes up. But realistically, you could never get less than 20-ish% on a max length stake. And when you're talking about a hex that's trading at 50 cents or $1 or $5, going out a few years, like that's going to be a tool that the world can adopt and use to make meaningful returns on all different time frames. And so like catching that now and figuring that out now at 1 and 2 cents, you're basically like a visionary. You're a future seeker. Like you can feel and see the future and what people's needs are, which is that in a world that's starved for yield, that they're going to need this tool, and it's only going to take a slow restructuring of the mind. People need to figure this out the hard way. And unfortunately, like all those guys that were coming in at 8, 10, 12 cents wanting to buy hex real bad with millions, they've all walked away from the trade now because it's down, and like they've lost faith in it or they don't understand it enough. that's them missing their buying Bitcoin opportunity below $100. Like that's what they're doing, is they're walking away from Bitcoin at like $50 or $100 because they're not seeing the potential of where this thing's going to go. And that's all because of that immutable code and the no admin key stuff. And I just want to remind everybody that you're in the right place, and it's a waiting game now. Like, and the only thing you can do is work to earn cash, educate yourself, educate others, and continue to either DCA or strategize around market cycles and have some sort of like theory based on that.
Yeah. And like the one like when I talk about HEX to everybody, and like the main pushback I get is the OA account still. And people worried about that OA account. What if they sell? What if? And it's like, okay, how we've been going for what, almost 1,200 days now. The OA hasn't done anything but stake, I believe.
The only thing that he ever did,
Or sacrifice.
Oh yeah, no, so a couple things, and this is good to clear up because this actually came up. So for those of you that are listening that don't know, last weekend I was in Chicago for RG3's Pulsechain tour, and I got to speak alongside RG3 and Crypto Coffee. And at the end of the day, we got up in front of the group for about an hour and a half and just answered questions. And one of the questions that came up was this OA figure and like what it meant for the longevity of the ecosystem. And I think like the quick and short answer is the biggest threat to the ecosystem would be if the OA was compromised. Okay. But so first off, what have we seen out of the behavior out of that based on the on-chain data? Well, the OA originally purchased came through. So the original first year of HEX, there was this thing called the adoption amplifier. It's where you could come in every day and there was a pool of 500 million HEX sitting there. And you could come in and deposit your ETH and you could get HEX back. There was a group of users that came in that tried to start to arbitrage the price by buying it out of the adoption amplifier and then going and selling it on the market on the exchange, and just basically extracting value away from the system and keeping the HEX price trapped at between 1 and 2 Satoshis. So what the OA did is he came in and he started recycling the Ethereum that was originally distributed from day one, which was like 10 to 20,000 Ethereum. And he'd come in every day and he'd take like 80% of the 500 million HEX every day. And the reason why I did that was because it tried to eliminate the arbitrage opportunity between the exchange and the adoption amplifier. So that was the first time that the OA protected the HEX price. The second time was around the big payday event. So on the big payday event, everybody that was staked the day before big payday and the day after big payday got a 30% increase on all their stakes just overnight. So what a lot of people did is they ran the price of HEX up to 1.5 cents, which was like I want to say it was like a 600% move leading into big payday, looking to dump that price chart after they got the 30% bonus. But the day of the big payday bonus, the day before, the OA went and staked all of the HEX supply that it owned, and it owned like 86% of all of the HEX. So what this did is it decreased the overall payout that everyone got on that day by a huge factor because it took a lot of the rewards back from the ecosystem. So what that did was it placed that new HEX in diamond hands in the OA that would never sell, and it gave the people that was trying to game the event by selling the news not as much ammunition to wreck the price chart with and just extract value out of the system. So that was the second time that the OA came in and protected the price of HEX. And the third time that it ever enacted was with the Pulsechain and PulseX sacrifice phases, where the OA sacrificed almost all of its HEX so that it had a lion's share of the Pulsechain and PulseX supplies so that it could continue to be a benevolent actor and protect Pulse and Pulse. This is like me stretching, is like we think that the OA is trying to protect both HEX, Pulsechain, and PulseX moving forward. So it's got 3 instances of interacting, 3 major things, and it's only ever done good things for it. Now, what's the downside? Well, if a government agent showed up to the castle and was like, Richard Hart, hand over your private keys. Your HEX coin is worth $10 a coin. It's the market cap is in the hundreds of billions or trillions. We're not cool with you having this much influence and power in the world. Give us your keys, and we're going to take them. Or assuming that he is the OA, right? Then all that needed to be done was the OA would send all of the assets it has to the contract address so that those funds could never be moved ever again, but they would still act as circulating supply to keep the daily payout in the HEX T-share lifted up. So like the supply wouldn't get deleted, but it would never be movable ever again because it'd be locked into an address that can't be sent or received from. And so then at that point, this would be the OA handing over the ecosystem to everybody that still has supply left to send and receive. And nothing could be done from that point forward in terms of like, there'd be no more attack surface on the OA coins. So in my opinion, it's all in good hands, and the OA has done nothing but positive things. It's proven, it's on chain. If anything, without it, it's the X factor in HEX that is going to make it one of the most successful DeFi projects ever have launched.
Yep. And exactly. And as more time goes on, as that 1200 becomes 13 and 14 and 1500 days, at what point can you just say, okay, like if you can't see it by now, I don't know what else to tell you, because everything you just said, only acting in the best. I didn't know that way back in the adoption amplifier, that was the reason to protect the arbitrage. He went and staked all that. So
Yep.
that's so, and that's so I can't. That's great. Now that's just more ammo I get to use with people when I get more pushback from the OA, and it is just naturally people can't comprehend that somebody wouldn't take advantage of it. Like, you know, with that much money there, with that much economic power, you know, for somebody that's actually acting in good faith of the community, most people can't comprehend that because you don't see that around the world.
Isn't it awesome? Like, I think only the creator of the contract could have the balls to sit through a 10,000x and never sell a coin, right? It's probably because he's sitting on huge stacks of Bitcoin and Ethereum, right? So, you know, it's not like he didn't make money on the deal, right? So I just think that we're in good hands, and now we have a vertically integrated system with Pulse and PulseX that can really just add fuel to the fire and help the HEX ecosystem grow. And with any luck, maybe we'll get the oh shit, what was I gonna say? This escapes me now. Fuck, what was I just talking about before that? I was like talking about
we were just talking about the OA, and
it's all good. So let's shift gears here a little bit. What I'm looking at here is the combined HEX price with the Mayer multiple. Like, so what the Mayer multiple is it's like the distance of the price in purple away from the teal line. And this particular HEX price chart is combined HEX prices. So like this whole thing about trying to track the value of HEX, I think it's important that we track both of them right now, because a lot of the adoption and the economic energy is coming from wallets that hold both hexes. So I think for right now, it just makes more sense to track them as like, think of it more like a stock split where like all the supply has been doubled, instead of thinking of it as, yes, there is two different assets on two different chains and they have two different price charts. But when I'm figuring out where's the opportunity, like I want to know like what the asset as a whole is doing, right? Because it's still a lot of the same users. Only a small portion of people have actually completely exited one side and went into the other. And so when I was looking at this on the Mayer multiple, like anytime it's below the green dashed line, it's in a good buy zone. And so we just recently had a tap of that green buy zone, and now it's like retracing down. And the last time we were down here was like last summer at the lows, was like the lowest it ever was. And this is combined HEX prices, right? So if you took what I said earlier, yeah, you'd be buying percentages of both of the hexes as you're DCAing in, just to try to get the most exposure with the least amount of risk, so that if one of them overperforms the other on the ratios, you could like flip some for the other one, no matter what direction it goes. But just that, like, it took us a long time to go from these lows back here in last July to come back up and to actually touch the green dash line. Whereas like after this breakdown, like we went right back up and touched the green dash line. So to me, it's showing strength in the hex. Like as overall, it's showing me that this move is gonna the move back above the green dash line coming off these lows down here is gonna be quicker than it was getting back above the 200-day back here last summer. Hold on, I got a question here from Mr. Chinks. It says, if you believe RH has something to do with the OA, we should know at his and our best interests. The OA, he has our best interests. The OA will want Hex to succeed and not dump on it. Yeah, so I think that's pretty much like proven at this point. It's just like the OA is a good actor in the system. I'm curious to hear what you think about RH streaming. Like, do you think that's got, like, where are you at with RH streaming? Because that seems to be like something everyone's like, when's RH going to stream again? I always say like that's not a good investment thesis if you're relying on one man to go on a live stream.
Yeah, definitely. I am not. I think it's everything he does is planned out and almost calculated. You know, I think my guess is once the movie comes out, and if we can fill theaters, make some noise, you know, start a little stir, and then maybe he pops up on BitBoy's channel, pops up on Ivan on Tech's channel, pops up on Crypto Banner, starts making the rounds around social media. You know, I think it's going to be a new Richard. I don't necessarily think we're going to see those long 2, 3, 4 hour streams of him just answering questions in the chat. I think it's going to be a different Richard, and I would be surprised if he doesn't stream or make a appearance within a couple weeks of the highest of stakes coming out. Maybe I would start to wonder if something was going on, but I'm not. Him not streaming doesn't faze me at all, especially we're in the middle of a bear market. I mean, we all know what he would say anyways. Like, if you don't know now what he would tell you, it's like, you know, go back and watch some of his old streams.
Yeah, there's plenty of good content out there that, like, he was so far ahead on the stuff that you can go back and watch 2, 3-year-old content and apply it today and do very, very well for yourself.
Literally, right? It's unbelievable. It's like everybody, if you go back and watch those old streams, everybody is just fallen. That was his, I don't want to say even his peers or his competition. Like, they were all scam artists. They were all running Ponzi schemes, and he was doing his best to straight up tell us. And like, as long as he just keeps doing what he's doing, he's going to end up winning, because people can't control themselves in crypto. They can't help but to scam and like steal money once it's ripe for the taking. And I think, go ahead.
Yeah, so you said that stocks pumped, BTC pumped, alts did nothing. What does it mean when the dominance starts to fall? And like I'm just curious, like to give that back to you, like if we're looking at BTC dom, like it is starting to fall again. I'm curious to think, like, what do you see in Bitcoin dominance, or like what we're looking at like short term? And I just got the chart up here just for reference.
I think we're gonna kind of just chop a little bit sideways, but inevitably we have to come down. And it was just bizarre that stocks pumped, Bitcoin pumped, and alts kind of did nothing.
Mm-hmm.
So I was expecting that. I thought the dominance was going to actually come down faster. So it actually surprised me that it held up where it was. But I think this just means we're going to have a bigger alt season. They're going to explode with more violence to the upside. I think so many of these alts that didn't make new highs last cycle, for whatever reason, they're just set up to, I think, explode. And I'm hoping that we have another, I don't think we'll ever see another 2017, 18 type alt season again. But what do you think?
I agree with you. I don't think we're going to see like a 2017 where like you could literally close your eyes and throw darts at the board on the top 100 on CoinMarketCap and watch it do 1,000x overnight. I just don't think, like, all of the mystery and like the unknowns about what an ERC20 could be is all that's kind of like fleshed out. People kind of understand Ethereum. They understand what a good ERC20 is. They've ran through all the narratives now, the meme narrative, the bot narrative, pick your narrative, like all this stuff's been played out. So I think the market is getting smarter and more efficient. And I think it's pricing in a lot of this stuff in advance of the halving, right? And that's coming up next April, May time. And I think like in terms of Bitcoin dominance and alts not performing as well, I just think that's because alts did so well in the beginning of the year. So if I look at just some random ones like this IMX token, Immutable X, like it did like 300% this year, right at the beginning of the year, 70 days, 320%. And so now it's like what, retrace the move, it's down 50%. So that's like par for the course. And this whole time frame is only 210 days. And then you got like FTM, which did pretty damn good off the lows. Went up to 300%. And then, you know, until the multi-chain hack, it was looking pretty. It was only down 50%. Now multi-chain hack, now it's down like 62%. So, I mean, these things did explode hard. So to your theory, I believe you're right. I think that in the case of like these alts, maybe they chop sideways, you know, and then something happens, a catalyst that's just going to eject them to the stratosphere perhaps next year. You know, I don't know when or how. Another coin, this Render token, did a freaking 624% off the lows. This is from December of last year to May. It did 624% in 140 days. So some of the alts have performed tremendously well. Like the dinosaur ones, like Cardano, yeah, it hasn't done much. It did 93% and then crashed back down 50%. Now it's sitting at minus 33%. So this is volatility exiting the altcoin space and more stability, which is what you want to see as this thing starts to move its way out of the bear market and fully into an altcoin bull market. And I mean, you could see this in Bitcoin Cash. Crazy pump off these lows. This was just 21 days up 260%. You know, Dogecoin has been consolidating. If I turn off log, go to regular, like this is just a clean, and this is weeks of time just trading sideways down here for 420 days. Wouldn't it be funny if today was the day it just pops, right?
Well, it feels like that these altcoins, it's just like XRP when the lawsuit, it was a couple weeks ago, it was like, all right, the settlement is going to be before September, could be any day, and we could just see one of these pumps. And it kind of feels like that with Solana. It feels like that with so many of these altcoins that they're just ready to move up at any day. And it also feels like they could just do this for the next 6 months. Mm-hmm. So it's a way more exciting time than this time last year. And it's like you're starting to, there's glimpses of hope.
There's like it's like a really big battle right now for crypto OGs that are sitting on stable coins. Like, when do I inject my capital? When do I take my stab at whatever chart I want to invest in? Like, and it's scary. The scary is the risk that's to the upside now. Like this XRP chart is nasty, dude. Like it's 2,000 days of sideways consolidation. Yeah. And then in that one ruling, the thing pumped at 2016 days. And in that one ruling, the thing pumped like, I don't remember what was the percent here. 104% in a day. And for those of you guys that are watching that might not know this, I traded it that day on leverage. I did a 10x leverage long. I posted it on here just because I was like, well, these kinds of opportunities only come once every 4 years. So I went leverage long and ended up doing 240%. I sold right here on this screenshot around 89 cents. And then that's when it broke down out of this parabola. This parabola is on a 1 minute chart. So quick little charting lesson for anyone that's curious on how to do this. Now, I don't recommend trading like this. But this was just one of those that was too good to pass up, and I didn't put a lot of money at risk. So if you're going to use leverage, especially high leverage like a 10x, flip to the 1 minute chart and turn on the Heikin-Ashi candles. So if you go to your chart and you come up here to the candle styles, there's like regular candle bars and then there's Heikin-Ashi. And Heikin-Ashi candles, they measure the momentum in the chart. So what's cool about this is like on this weekly XRP chart, if I switch to the regular candle, it's printed 2 red candles. But if I switch to Heikin-Ashi, based on the average of price movement over time, all these are green candles still. This means that the momentum has not left XRP, and it's just consolidating here in a sideways pattern before its next move higher, based on what this is showing you. So like if you deduce that down back to like the 1 minute chart, you can actually see momentum printing on these candles on the Heikinashi, because it's measuring price performance over the average of, I think, the last 25 candles. So you can, as these are printing, you can really feel the momentum coming in. You can watch the volumes and try to make a trade here. Now, do I recommend it? No. Do I do it? This was like my first trade since like April or March, and I don't trade that much. So I just figured I'd show that just to kind of explain some of like the elements that I'm looking for on like a trade like that, where like, you know, we've been waiting for Ripple to come to some conclusion for 4 years, and
Literally.
then you get it. So it's like, okay, this is gonna, and by the way, that day, a lot of the altcoins popped. They didn't have follow through, which was what was surprising, right? You remember watching that, and like everything pumped like 5 to 10%, but then there was no follow through, which is good because there was no nasty breakdowns either. So everything's just kind of like being absorbed, and then a new floor is being created, and then it's going to be absorbed again. This is like the very beginning stages of altcoins really starting to head off to the races.
Did you catch the XLM pump at all? Since they're so like tied together almost.
They are, dude. I think aren't they totally correlated, right? So like, I didn't catch that pump. Let's see what that looked like. I seen posts of it on.
It was like identical. It went from like 8 to 16 cents or something.
Crazy.
Almost 100%.
160% wick to wick. In one day, it did 105%. That's crazy.
Yeah. I've been using XLM as an example on stream for a long time, just as one of these coins that no one talks about. And when you pick up your phone and you download the Lobster wallet, which is the staker app for XLM, and you load it up and you send XLM in there, you have an option for MoneyGram right there. Deposit USDC.
No shit.
MoneyGram. So MoneyGram is now XLM. They have USDC natively built in. They have smart contracts now. They have bridges to Ethereum, the All Bridge that I believe XRP is using that too. So they now have access to other ecosystems, and it's like it's going to get to a point like their Starlink partnership. Like Elon is looking at XLM to run Starlink. So you see all this stuff, and it's like there's going to get to a point where just
this is awesome. This is super exciting to me because it's like this is how the Amazon of blockchains comes to life. It doesn't come from giant price pumps like this where people just get in and trade it. It comes from actual utility being built on top of it. So that's super exciting to hear. And that's really like some deep alpha. Like, you know, how much do I want to diversify into all these other things? Maybe not. But if it was a chance that it could be the Amazon of blockchains, then it's probably worth at least a small bet, right?
Right. Yeah. And like I do you know what ITRUSTCAPITAL is? It's it's a crypto IRA platform. So if you had any 401k with an old job or any IRA that you set up somewhere, you can move it into ITRUSTCAPITAL.
Gotcha.
And they have like 25 of the top 100 coins on their platform, and you can just trade them for 1%, and it's in an IRA. So it was like Ethereum, XLM, XRP, Cardano, Solana, or
Chainlink, probably.
Yeah, Chainlink, exactly. Or I can invest in this new small cap real estate fund or this large cap equity fund with my thing and get 6%. It's like you can't even compare it. So like a lot of people, and they're like, "Oh, you own XLM? Like, what are you doing? HEX, it will never outperform HEX." It's like, dude, like
that's not the bet you're taking. So like for those people that say that or think that, like that's not the bet you're taking. You're just it's your hedge against, like it's smart to not be all in on one asset. You know, like if you're all in on let's say you're all in on PulseX and HEX, they're all the same thing because they're all bound by Hart's law. So like they're going to move up and down together, and you're never going to have exposure to something that might pump when they're not pumping. And so when you're talking about fundamentals that might drive a pump somewhere else, this XLM trade is actually a really good one. You know, I like that idea. You know, and there's other ones that I'm looking at too, like that have good technical foundations, like Chia. And look at this; it's like just consolidating in this channel down here. And if I turn on regular, look at this thing. If it ever returns even like halfway up this chart, got the Jack 11 chart going on, 3,000%. You know what I mean? And like it's got a good foundation too. It's got a good founder. It's got good, you know, you can mine it. and it's not mined with ASIC hardware, it's mined with hard drives. So it's a different technology. It's more accessible for everyday people. Anyway, so there's so many opportunities in cryptocurrency, you know, and all the charts are screaming that they're at their lows. And I remember in 2020, and I'm sure you do too, after DeFi summer, the types of breakouts that was happening on some of these charts was like making me mad, because it's like, why did, you know, being an ETH and Bitcoin kind of maxi at the time, I'm thinking to myself, why is Cardano going from 3 cents to 25 cents in 3 weeks? Like, that doesn't seem fair to me. And I remember thinking, like, you go back here, I think it was here. Let's see.
Bro, it was it was almost 4 years ago to the day. I remember in summer of 2019, my parents have a place down in the Delaware Shore, and up in New York here, we could not use any exchanges. Like, I had my Ethos wallet way back in the day that I could only use out of state. So I drove down to Delaware and put $5,000 on Kraken, and I bought Cardano, I bought Kusama, I bought Gnosis, I bought ETH Lend before it was Aave, I bought Civic and Dash, and I spread it around. And yeah, I went back to New York, and I didn't touch that app for probably 8 months. And the next time I opened it in 2020, I could not believe it. Cardano, it was unbelievable. So the whole time I'm thinking, I'm like, all right, these coins are going to do the best. Like, I'm into Hex. I'm looking at VeChain. I'm looking at Zilliqa. I'm looking at Polka Starter. We're all over the place. And meanwhile, the best performing coins were the ones that were already in my portfolio that I already, for whatever reason, identified it as a coin I want to hold. I bought it and tucked it away and forgot about it. And 99% of the time, the ones you tucked away and forgot about are the ones that outperform everything, because we are not at a utility-driven market yet. Utility is great. It matters. And narrative's great, but at the end of the day, it's a viral community. That's all that matters right now. It's everything, and that creates green candles and price go up, and it's just a snowball that just starts growing.
This is why when it comes to eHEX, pHEX debate, I think it's hilarious. It's like, look at, what are the coins that you just named? Cardano was like on its second cycle here. Dash was on its third cycle here. What else did you name?
ETHLend, Gnosis.
So then I think Gnosis was going through its first cycle. But the point was that a lot of those coins, they were bets that people had in the last market that they were still bag holders, still diehard communities behind them, and they had a vision of them pumping in that next cycle with Bitcoin, because that was how this worked. Was going into the 2020 cycle, you watch Bitcoin pump, then the money would flow out of Bitcoin into Ethereum, and the money would flow out of Ethereum into altcoins, and then it would cycle back through to Bitcoin. And it was just a cyclic movement of money chasing green candles all the way through each of the assets. So back here, the theory was, if you got into those types of coins, they would perform well, and they did, based on that very fact. And so when you're looking at this current setup right now on like Hex versus Hex, it's not a lot unlike, if you're betting that only one is going to succeed, it's kind of crazy, because I always use the ETH Classic example of like a coin that was basically not used on chain at all. I mean, there was a very small community left of these guys, but because Ethereum went to like $5,000 in ETH Classic was still down here at $5, the disparity was so big, it was like 100 to 1 or 200 to 1. This thing ripped 3,000+%. I think from wick to wick, from COVID to the top, it was like 4,900%. And so would you really want to get rid of all your eHEX thinking that maybe that it could knowing that it could perform thousands of percent? Like, at some point, the ratio of hex to hex is going to get so vast. Let's say it goes 3 to 1 or 4 to 1. Somebody's going to come back into the other one, because it's still the same contract. And with any luck, gas fees will get reduced on Ethereum, and that's going to totally change the argument back in favor of that move, right? So it's peanuts to me. It's my little peanut brain just sees that as like obvious, like hold both, both, buy both. Don't miss out on 4,900%.
And just look at the liquidity on Pulsechain and look at the liquidity on Hex. I think it's a couple million versus 50 million Last time I checked, it was 25 times greater. So what could potentially move faster and harder? It's like, where's all the economic energy coming from right now? Mostly Ethereum.
Yep. Ethereum's where, where all of the EVM, the most prominent EVM in the world is Ethereum. This Hex is built to be a store of value, and so how would a store of value lose its store of value proposition because of a fork? That doesn't make much sense. And here you are sitting at $3 to $4 million of TVL locked in here, down here, same levels we were at back here in May and June of 2021 when the price went from 2.5 cents up to 7 or 8 cents here, and then eventually it did its blow off and ran all the way up to 56 cents. So we're down here. The longer that this trades sideways down here in terms of TVL, that represents players, regular actors, whales, everyone together just buying that supply off the market. Just like back here where like the TVL didn't change much. It only changed from 3 million to 6 to 7 million over like a 3-month period. But the price during this period went from 2.5 cents in May all the way up to like 21 or 24 cents by August. And then it did its run up, right? So it moved like a 10x, but the TVL stayed relatively the same. Yeah. Because when the TVL stays low, it's easier to pump. That means that as long as like big bag holders don't come in and dump like crazy, like we saw here on this TVL crash, as long as we can sustain these levels of TVL, you can pump the price chart with relatively little amounts of cash relative to the global economy. And so this is a perfect setup for eHEX to continue to just coins to be reabsorbed by the diamond hands, and then pump it, and then absorb the next floor level, and then pump it. And you can kind of see that's what's going on here. Is it's just trending in like this basic channel and riding up into the right. And all this was here was, okay, this here on eHEX was traders exiting their positions from this run up. So this run up here, traders exit here. Traders start exiting here. A big bag holder comes in, pumps it. This is the Cbdc. I'm sorry. This is the banking crisis. People leave stable coins and they pump it back into Hex. Clear that high. Price chart starts to climb, and then testnet V3, sell the news. Traders exit their positions. Fear, and then mainnet comes out. Pump comes off of it. Then this is the liquidity grab here. So this whole thing was liquidity grab and arbitrage for big Hex holders on the Ethereum side to basically get as much ETH and USDC value to preserve it, steal it back out of the liquidity pools, so that they can use that to diversify back into Pulse, PulseX, INC, Hex on either chain, whatever it's going to be, a sacrifice phase or whatever it's going to be. They were just trying to preserve their wealth after the fork. This is not unlike Big Payday where the price crashed 84%. And now since we've kind of like started to bottom, this is the reaccumulation range where it's just trending up into the right sideways slowly. And the liquidity is so low, as we were showing here, that it's a perfect setup for this thing to just kind of bounce off these lows. Like I'm not going to say it's going to happen exactly like this, but I mean, you could quickly just try to take out 3 cents and then 5 cents after that, just because of the liquidity being so low, and it won't take a lot. And then, like again, to your saying about the PulseX side, I'm pretty sure that there is a ton more over there, so it's so much harder to push the price up over there, and you're fighting arbitrage between Pulse, PulseX, and whatever else. But in the end of this whole scheme, they're all going to ride up and down together, and that's the main thing here. It's like no matter what, Hex is going to ride up and down with Hex, Pulse, and PulseX. So, but if there is any short-term upside on eHEX, it's going to act like rocket fuel for the rest of the ecosystem, I think.
I think so, bro. I just think Hex is Richard's baby. It's like it was his firstborn. He's not going to let it he's going to make sure it gets its shine. I just can't see that not happening.
Yeah, here's your 22 million in liquidity on Hex on Pulsechain. So this thing's got $22 million of liquidity, right? And then on the ETH side, you've got a whopping like $3.5-4 million of liquidity. So which one can pump harder?
Yeah, exactly. And even if just assuming that ETH doesn't even take care of the fee problem, and we still have to pay $50 a transaction, I don't see that mattering. There's still the whales control the market, and a certain fee doesn't matter.
Mm-hmm. It doesn't. It like a lot of those guys that have huge hex stakes on ETH, they got enough Ethereum in profit that they're good on the gas fee problem. Like that's been solved for them because they made so much profit. And unfortunately for the little guys that are trying to come into the ecosystem, you're inconsequential to the success or failure of the token. And that's just the reality of it. And at some point, these guys are going to want to capitalize on their hex stakes that's coming out this cycle or next cycle. And just like with big payday, they'll run the price chart up. Before the big payday, they ran it up 600%. And then they extracted the liquidity. And then right before the testnet, ran it up 600%. And then extracted the liquidity. So when you see a bunch of big stakes coming off in the coming years, they're going to run it up thousands of percent, and then they're going to extract the liquidity. And the thing is that floor that is created, that is going to be a floor that's never penetrated again.
Exactly.
And we're still waiting for that day, right? Because I thought we were here, but I just didn't understand at that time. I mean, literally the day we printed this candle, and we were like testing the 200-day moving average, which is this blue dotted line. I was live with RH Max, and I was like, so I was projecting out if it plays out like big payday, we'd be going down like 65% or something. Let's see, from top to bottom, it did 86%. So I was just basically measuring 86% down, and that gets you to like this level. So we actually overperformed it slightly. So live that day, I was like, okay, so because this candle was touching the 200-day on a red, bearish engulfing, I'm like, okay, shit, this could actually go a lot farther down, and it did. And it's because of all the reasons I've just outlined. And so now what it is it's a huge opportunity for the market to absorb coins back at these super cheap prices. Again, eventually floors get created. That's what happens with ETH. That's what happens with Bitcoin. Any store of value coin, and especially one that's tied to an asset that only goes up. That's the T-share. That thing's going to go up forever, and it's going to continue to act like a magnet on a bullet train moving up to the sky, going to keep pulling the hex price up with it. And all it takes is like a magnifying effect of new users coming in or pump money coming in. That's going to really solidify that truth. Because people don't understand things in fractions of a cent, but they really understand things when they're 50 cents or they're $1.
And the same thing, like I remember loading up at ETH at $80. I remember getting Cardano at 3 cents, at Matic at 0.7% with Hex in early 2020. And it's like once these coins, you give them a cycle, and if they have product market fit or they have a community that keeps them around, you get to the point where your entry point is going to be 8, 9, 10x in profit, even after an 80% dip. So you don't need to sell. Once you get these generational entry points and the price takes off, it's never coming back. And like, I can't stress enough, like we are so close to that point right now. Mm-hmm. And once we take off in a year, 2 years, I just don't see with legislation, with regulation coming, with where the world's going, everything's going digital. Every kid that gets a year older, they grew up on phones. It's just like things are going this way. They're not coming back. They're moving faster. And it's just going to be a springboard effect when the big money is able to hit these decentralized liquidity pools that are incentivized to grow. Like we don't have anything like it yet. But when that's out there, you got to just think, what's a fund manager going to do when they have this opportunity over here to earn 5-7% without having to risk anything? Like that changes the ball game, I think. Mm-hmm. And it will inevitably bring people into Hex. They will look for real DeFi, and you can't not find Hex at that point.
Mm-hmm. Yeah, it's crazy. Like when you look back on that ETH chart back when you were buying there at $80, like when you look at it from the beginning to the top and then back down, it doesn't look that bad. It looks like ETH dropped, like I think it was like 95% here. So it doesn't look that bad on this chart. I think it did it did do the 10,000x, right? And then, but if you zoom in a little bit, it starts to look worse and worse. Like this looks pretty scary at this point. Like if you bought around, let's say, $50 ETH, you basically retraced your whole move. So like this is like a same position that a lot of hexagons are in right now that have been DCAing in from like 40 cents down. But then like if you didn't capture that floor, you had like one other chance to capture that floor, and it didn't quite come all the way back to $80 per ETH. And I remember this because I was there with you, buying it at $80. I bought 55 ETH down here. You know, I was just like in a good position to be able to do that, and it was awesome. And unfortunately, the killer is like selling too soon, right? And that's like one thing I want everyone to know is like, you know, don't be too eager to sell on the way up right away. Just because, like, give you an example, HNT, Helium Network Token. I bought this little device. It was like a little HNT miner, and I got it pre-sale. Like I got it one of the first ones ever, and I plugged it in. And the initial inflation rate was pretty high, so I ended up with like 4,000 or 5,000 coins, and then the price went to like $2.89, and I decided to sell the whole stack. Like I was like, because I had paid off the miner, plus made like $2 or $3 grand, and I thought I was so fucking smart. And then the HNT price. Then I mean, obviously I kept mining it, but then they changed the inflation rate, and so then you weren't getting as much anymore, and then the price went to like $50 or $60. And I like, you know, mad regrets, right? Not really, but because I'd done all right with HEX, but there's so many different variables that in the crypto market, just like to story time. Like I remember, you know, I might have lost there, but then because I had bought Litecoin miners for $50 a piece in the bear market bottom down here, when Litecoin was in the shitter, you know, buying these miners for $50 a piece, I had like 8 or I think I had 10 of them plugged in. Like then all of a sudden, Dogecoin like exploded to 70 cents. And with these Litecoin miners, because they're based on the same hashing algorithm, you could mine Litecoin and Dogecoin with the same miner. So I was making Litecoin every day and at a good rate, but I was making like $1,000 of Dogecoin a day, which then I was flipping into HEX because HEX was only at like 3 and 5 cents.
Yep.
And so it's like if you see opportunity early, you know, even if you don't know how it's going to happen, of course, I could have never predicted Dogecoin was going to go to 70 cents. That was like the last thing on my mind. You know, I got the Litecoin miner because I thought Litecoin could go back to its all-time high. But so like sometimes these things will work out in ways that you least expect. And so I just, you know, just don't sell too soon and don't sell yourself short.
And even if like I've seen them, I've made the mistake too. I never forget with Decentraland and Sandbox. I bought like $100 of them way back in 2019, early 2020, just because I thought it was going to be cool. And I went onto the websites and I looked at them and I thought, holy shit, what did I just buy? These look worse than Nintendo. I thought they were scams. They were just going to be scams for sure. And I sold both of those bags and got rid of them, just convinced that going to these websites, who the hell would ever use this shit? And sure enough, that $100 would have turned into $20,000, something like that, minimum. I mean, I think I was bought Decentraland at maybe 2 or 3 cents, and it went to what, $6?
Crazy.
And so the things that you're sitting on and you expect to do the best don't, and the things that you forgot about and never expect, the Dogecoins, you bought a Litecoin miner and you end up crushing it with Dogecoin as a result of that. Like no one can predict where it's going to come from, and just don't sell out of bags and taking profits. Like, yeah, when you hit your first 100x, it feels awesome, but it feels worse when you miss the next 200.
Mm-hmm.
Like with Matic, we're gloating at selling at 100x, facing reality, and we're all like just the happiest guy, sending memes back and forth all day, and then a month later, it was like, oh god.
That's why you never sell the whole bag.
Exactly. Always keep just a little moon bag, because when you do that, I promise, even if it's $100, if you will always forget it, and it'll drive you nuts, and it might make you do something stupid in the future. all because I'm not holding that little bit and just, it's so funny.
It's a hedge against, it's a hedge to have a little bit in a lot of things. I think you do need to concentrate your wealth into the thing that you have the most conviction in. But then I think once you're set there, and I always point to like staking ladders as being a good core portfolio allocation. But beyond that, once that's set and in place, then yeah, you need to be thinking broader about, and maybe that's not for everybody too. That's the other thing is like some people I think the people that's listening to this stream is probably more open to continuing to keep up with the research, and being genuinely interested in the economy, the markets, and then being on top of the fundamentals and stuff. That's why we're listening to Adam, like, because he's on that stuff and he enjoys it and he's good at it. And I learned a little bit today that I didn't know before, and that's good. I mean, that's what it's all about, is sharing information. And so for those of us that have it in us, yeah, it's worth taking bets on some of this other stuff that's not just all in that side. But then flip side of that coin is that you should have that core thing that you are fully convicted in, that it's going to pay you to hold it.
Yep. And I just say like $100 lottery tickets. If you can afford to go out and gamble and go to the casino and play some roulette or blackjack, then you can afford to take $100 and buy an altcoin and just to forget about it. And it's this, I look at it just like that. They're lottery tickets. It's like kind of gambling and do it with what you can afford to lose. And if you can get in that habit, you can afford to strike out on 19, and then the 20th one does a 50x, and now all of a sudden you're up in profit again. And just like that, things can change.
I did want to bring up something else that I don't think we talked about yet that is just interesting. So this is the chart I want to show you. First, I'm going to show you, this is just the S&P 500, which is the stock market. And so kind of dialing it back into like what we were talking about before with like, we're in a weird place right now where commercial real estate looks like shit. The Fed's expenses is through the roof, yet stocks are still pumping to near all-time highs, right? They're testing these this top here, which was, hold on, let me get my brush. Here. Oh, I'm sorry. Here. So we're kind of back at what was this top here, double top, triple top potentially here. So, could come down, but realistically, this thing is what it's showing me in terms of like the pattern of what the S&P is doing is this is showing like continually all-time highs for years and years and years, right? This is going back to 2008, right? But let's look at it measured against, and this is what I'm going to get into again with that debasement of the currency. So like this looks like a decent chart on the surface, but when you measure it against the amount of money that's out there, this is what you get. This is 2008, you guys. Here. And this is where we're at now. So like against the money supply, there's been no real growth in the economy.
It's gold too. I think it's a flat line. It's all an illusion in dollars that evaporate in front of your face. And if you can't get into stocks where you're in the IPOs or pre-sales, you're just exit liquidity for the top 1%. And it took me a long time to understand the scam the stock market is.
Yeah, so like because the real growth came from the dot-com bubble here, from like the 80s and then the technological boom all the way up to like the dot-com bubble here in 2000, measured against the new money that's being printed, we've never came up to this level ever again. And so you had the 2008, tried to recover, triple top, breakdown. We've tapped it like, you could argue once, twice, 3 times, 4 times now. This is the 4th time we're trying to bust that level from 2008. And we just haven't seemed to have been able to do that. And if you measure that in Bitcoin, it's showing you a similar story. This is going to blow your mind. Like, they've been running the same exact thing on us on Bitcoin too. Hold on one sec. I gotta get the right chart.
It's amazing. And as in inflation too, it's not what it used to be. If you use the metrics from 2019, they changed them to get the numbers they do today. So they're actually way higher than they are. And you actually can't believe anything.
So this is the what he's talking about, you guys. This is the consumer inflation. This is shadowstats.com. They tell you, look at this bottom chart. The blue line is measured in the 1980 basis, how they measured it in 80s. So we'd be at closer to 12% to 13%, maybe 16%. versus now they're saying we're at like 4%. And the red line is how they currently measure it. The blue line is how they measured it before they started to adjust the metrics for how they measure it. So it shows you a clear divergence here. If you're measuring it based on how we measured it in 83, this would be closer to like 15%, probably. So yeah, prove your point there. And then this is the Bitcoin against the M1. So this is the total dollars in existence. This gap here is COVID, when they printed trillions of dollars out of thin air. But look at, this is the 2017 all-time high, just like the dot-com bubble. This was the real organic growth of Bitcoin when Bitcoin became solidified as a serious asset in the economy. It goes to $20,000 per coin. And this is when the big dogs stepped in. They're like, we're taking this.
Right when the big boys stepped in, right there at 20K.
We're taking this off your hands at the cheapest price. You know, perhaps the CME created this floor here. I don't know. But the point here is like top, double top, triple top, and we're not even there yet. Bitcoin's at 30K here. Isn't that crazy? So like,
oh my,
this is what's crazy. 14K Bitcoin here, 64K, 69K, and this is at 30K.
So 100, we're gonna be at 100K, and we're gonna be at 80%.
You'll be at the same level as you were, and they're using this newly printed money to prop it up. Or actually, no, it's Bitcoin is showing you how Bitcoin is reacting to debasement of currency. It's not actually growing on its own. That's what I'm trying to say. This was like natural organic growth of Bitcoin without the, just relative to the economy. But then this has just been relative to the money supply. So they print more dollars, and then Bitcoin gets propped up because it's dollar going down. Bitcoin's an inflation hedge and a store of value. And then they just keep replaying the same thing over and over and over. So yeah, 100K potentially this time. 80 to 90K maybe. Come up here again, get broke down again. Crazy. And then so let's go back one more chart here. Back to that S&P chart I was just showing you. So here's the S&P measured against M2 again. So you can see we haven't really done anything new since the year 2001. So then I did another thing is I took the same idea, but I combined all of the stock markets together. So the Dow Jones, the NASDAQ, the Russell, the S&P, combine them together. This goes back to 2003, and this is kind of showing a different story. So I'm going to go to like a 3-month chart, so it's really clean. So on a 3-month chart, we've basically been trapped the same way, but at least it's broken the 2008 highs here. Now, I don't know if you go back to 2000, which I don't have the data for on this chart because it's a kind of like a combined index where the data doesn't go all the way back, if we've broken out of that high. But all I'm saying here is that this is our 4th attempt to break out, and this particular pattern is it's a broadening wedge pattern with a flat top, and because it made a higher low here, this is implying that they're going to continue to print money, and it's going to basically accelerate all these stock markets higher. So the stock markets look like they're going to actually go higher. Now, if this would have came back down and tested the base again, then you could have basically done one of these, but that's not what happened. We created a floor here, and so all these stock markets measured against the M2 money supply looks like it's going to break out, retest, and resume off that level, and we're going to see all-time high valuations in the stock markets, which would mean that the money printers got turned back on, which would mean cryptocurrency is going to go up with it as well and overperform the stock market. And we're just kind of waiting for all this to play out.
I completely agree. I mean, the Fed is what tricks up their sleeve do they have now? Like, it's not feasible. I don't see them. They can't raise anymore. They're going to destroy the economy. Banks they'll just collapse the banking system if they just keep raising. It can't happen. They're going to have to. They'll be printing by the bit. I think it's not coincidence when Bitcoin launched in 2008, right after, or 2009, right after the collapse. And it's so cyclical with when the money printers get turned on.
I'm going to show you a comparison chart with the Fed funds right here. So we can put the rates on top of Bitcoin and just kind of draw any relationship we can. Okay, so the blue line is the rate, the interest rate. So when interest rates were low, Bitcoin went up. When interest rates went up, Bitcoin went down, but it went up. When interest rates dropped to zero, Bitcoin crashed on the COVID crash here, but then it rallied after that. And then after Bitcoin rallied to its highs, now interest rates have risen again. So that no matter what they do to rates, Bitcoin continues to overperform no matter the direction rates are really going, which is just crazy to me. But we can say with certainty that when rates pause, like here, there's potential for short-term topping on Bitcoin. So like when they dropped rates rapidly, that's when you saw like the COVID crash was when they dropped rates rapidly back to basically to free money. And the theory is because if I could sell Bitcoin at like 10K and then borrow a bunch of money with no interest on it and buy it back at 3K, wouldn't I? And that's like the games that these big institutions are playing. And so like what I'm looking for now on Bitcoin versus the rates is when are rates going to like stay flat for a little bit or maybe just incrementally go up like this into next year. And then all of a sudden they just drop them. So maybe then Bitcoin comes up to here, triple top at like 60K. They drop rates, Bitcoin crashes. You know, they drop rates, Bitcoin won't go that low, but like let's say it comes back to 30K. They drop rates to zero. People buy it all back at 30K. Then they run it up. You know, and this could be out into 2026 potentially.
I've heard so many great arguments for the bull run, ending altcoin season for the fourth cycle in a row, ending a year after the halving. I've heard great arguments for the markets pricing everything in so early and us having a blow off top in the end of 2024. And then a good logical argument for this being a delayed cycle and actually blowing off at 2026. So like I've heard arguments for all three of the above. So nobody knows what's happening.
Yeah, it's definitely not going to play out like it's played out in the past. I don't think. But just to like kind of give us some context of what that could look like. I mean, you could see something like this where, going into the end of the year, things pump up really high, something like this. Let's say they hit like 50K, 60K, maybe. I would say might not make it to past 50K, but I don't know because like this is how these moves work is you can't predict when insane demand just re-enters the marketplace and it could be any event. And then perhaps, so you do get a move to 60K, let's say, triple top. At this point, Fed's paused and then all of a sudden they pivot and then they drop them to zero. And then you get another crash back to 30K. That's your base. And then we go off leading into 2026, right? Something like that. And that's kind of what I'm seeing is it's a double bubble cycle. If it doesn't happen like that for crypto, it's just going to be a slow grind, just a really slow grind.
Yeah, I think so too.
And I would like to see this again. This would remind me a lot of 2017 all over again. And it would be the last super cycle that we'd probably get out of crypto in terms of like these organic parabolic moves, and it'd be from just natural demand of the economy capitulating into the one thing that's going to save them, I guess.
Yeah, no, I pretty much agree with everything you're saying. It's just there's so many different variables. It's like whenever the ETF comes out, I think will dictate a lot too. And whether it comes out when the price of Bitcoin is at 40K or if it's closer to 60, 70, 80, if it's next year, I really think that's going to be a potential topping signal, depending on what Bitcoin is, a local top.
The way that works is like when they file for an ETF, I think they get a 300 days to respond. So let's see if I can find my tool here. So 300 days from the filing point. Damn it, wrong one. Would put us at like next April. So if we don't get right around like this general region. So that could be then what does that look like? Well, this extends out a little bit, and then you peak, triple top, sell the news event, ETFs launch, retail piles in up here between 50 and 65K. Blackrock sells their bags. Fidelity sells their bags.
Yep.
They push the price down. They buy everyone's bags back at 30K.
And
they
then
rinse and
Bitcoin's
they
a scam. We need CBDCs.
I mean, you could get that too. That was something that came up last weekend too at the talk, was about CBDCs, and that's a whole conversation. I think the simplest thing I can say about that is that people confuse CBDCs with capital controls. So like, we already have CBDCs.
Exactly.
But what we don't have is like really intense capital controls. And so I think people are more scared of the buzzword than they are realistically thinking about like the constitutional republic that we live in here in the United States. And if there was ever a chance for a whole takeover of the United States, it would have happened during COVID, when the entire nation was the whole world was terrified, and allowing organizations to take their power away from them. But that didn't work. And so like, I just think that that's in the past, and the SEC lawsuit against Ripple's passed. So the precedent is now set that this is the path forward, and it's just got to play out now. We're already positioned well. We've got all of the green lights have been flipped on. Things are good. And so I think that's my summation here is, you guys, you're in the right place at the right time, and you're going to benefit on this like last big cycle for crypto. And then things are going to dampen in volatility, and big orgs are going to take control of these markets. And the last bastion of hope for us is DeFi moving forward.
I completely agree, bro. And you're seeing Bitcoin now being politicized for the first time ever. HGH Jr. is talking about it. DeSantis talking about CBDCs. So you're seeing crypto. I already see that Gary Gensler, he's being set up to be the fall guy. It's the Democrats' fault. It was Gary Gensler's fault. They just kept stifling innovation. These damn Democrats. And then the whether it's RFK Jr. or just whoever comes in, you can just see it. Blame them. We have the solution. We're gonna fix it. And they're already setting up the narrative for it with the ETFs and all the comments that we're seeing from the candidates over a year out from the elections.
Yeah, the elections are definitely a whole other conversation for sure. I think it's exciting because it's like you're saying, all these candidates are talking about the importance of Bitcoin. Texas is really behind Bitcoin. Many states are, Wyoming and others. And it's just going to be a great setup. Like, it's now that it's being, the thing is, like, I think Crypto Coffee nailed it on the head. I'm going to try to paraphrase what he said, but he basically was like, there's not a lot of people that are, how did he put this? He's like, it's like a for crypto thing, but there's not that many of the people that's against it. Like, it's on, like, if you try to base your candidacy on crypto, it's mostly just going to get you votes. There's not a good way to hurt you if you're pro crypto. That's what I'm trying to say. Like, nobody's really going to not vote for you because you're pro crypto. I don't think.
Yeah.
But the other way around, if you're anti-crypto, people will not vote for you. So it's like a one-sided political topic. Like, it's really just crypto's going to help people. And so, like, if you're pro-crypto, you have a higher chance of getting voted in. There's not many people that just won't vote for you because you're pro-crypto. So I think that was really cool and enlightening that Crypto Coffee was able to wake me up to that too.
Yeah, definitely. And yeah, shout out to Crypto Coffee. He's crushing it with the streams. We got so many people in the community just putting out great content. I feel like we're like, when I go out and go and step into other communities out there around, sometimes we like take for granted, and like people, all the fighting and the bickering and the dumb shit that happens in the community. But when you look at the big picture, we are like setting the trends for crypto. I think we have the biggest, loudest, most viral community out there. And that right now seems to be the most important thing, more important than narrative, more important than freaking tokenomics, more important than almost anything in a project. So if you're in the Richard Hart ecosystem, you're in the right place right now. Like, we have all the upside in the world with, seriously, what's the downside risk from here? And you have to ask yourself.
Yeah, dude, we're perfectly positioned. We're with the smartest group. Like, Richard, like, educated everybody on what it was all about. You know, there aren't many like him that did that for so many people, and then gave them the resources to do something about it too. So yeah, we're in a great spot that way.
Yeah, guys. So awesome. Well, I think that's it. I think this is probably a good place to wrap it up. Can't believe it's almost been almost 2 hours. Jeez, time flies when you're hearing alpha from Axis. Appreciate you stopping by.
Appreciate you too. I learned something new this stream, so that's awesome.
Yeah, bro. I mean, people, it's like XLM is so boring. Like, there's nothing to talk about. You know, their DeFi is just coming there. Smart contracts are just coming there. But when you see that they're basically MoneyGram now and peer-to-peer payments, at some point that's kind of too big to ignore.
Mm-hmm. The last thing that we didn't touch on yet that I was just looking at her like bullet points was like the Zen versus Hex thing. Curious to hear your thoughts on that.
So I've been really hammering home the minting of the Zen FTs the last couple weeks because a couple of my friends that have been doing it from ETH in the beginning, spending $10 a mint, and they're printing 160, 170, 180 bucks a day from a year ago. And if you're in a position where you can afford to miss out on stuff like that, then that's fine. But if you want to increase your bag, I was doing the math last night. To do a max mint, it costs like 27,000 Pulsechain. And if you get 4 billion coins, even if it drops down 50% in price, you're still getting back over 400,000 Pulsechain. You're putting in 27,000. So you're 15xing your bag with taking what risk? And there's going to be other projects out here that are going to be burning both Zens, PZen and the Zen Classic, or whatever you call it, on Pulsechain. And I just see, in doing crypto consulting, I've gotten pushback from 2 coins in my entire life, which is HEX and the other one is Zen. So when I get that pushback after seeing the HEX controversy, I'm like, okay, I'm bullish as hell. You're fighting back. I'm all in. There's something there. So immediately I know, like, all right, people are fighting about it. There's something there.
They're owning it. That's the thing is, like, if somebody's publicly shitting on something, they don't own it. So that gives opportunity for those that do own it.
Exactly, bro. And it's the people that missed out. They didn't do it.
Don't buy Bitcoin at $100 because you're jaded against it and saying it's a scam that's going to zero, and then now you're buying everyone's bags at 15 to 30K.
Yeah,
the biggest players just they miss these things because they don't have the agility that we have as like little guys in the economy.
Yeah, Aptos is the perfect example. Within the last 8-10 months, it launched. I knew it was going to do well. I was looking at it at under $2, and I was like, you know what? I hate how it's funded. I hate what they're doing. I'm not supporting that. And sure enough, you missed out on the easiest 7x of your life. And if you can afford to miss out on those opportunities, yeah, then you have the right to talk shit on Twitter. But if you're in a position where you need to seize these opportunities, because they're going to be few and far they're between every year we go out. Like the idea that you're going to be able to 1000x, like that's going to be a thing of the past. Like it's going to be so rare, and that's why
it's just like professional video games. The skill curve is getting deeper and deeper. Like you have to be so much more well read, and knowing what to look for, and knowing how to use all the tools, and knowing how to set up passive and active income streams. Becoming like a full-time financial planner and manager is like where crypto's headed, because that's the necessity that's created by the innovation that's in front of us. And so you can either stand idly by with some hex stakes and do all right, or you can like follow people like Adam that is on top of it and trying to compound his returns. And that's like, hats off to you.
Appreciate it, bro. And it's like diversity. What if Richard has a heart attack tomorrow? What if Pulsechain fails? What if Hex fails? Like, you need to just think to yourself, do I have a plan if all doesn't go well? And if any of those things were to happen, yeah, do you have a little bit of Zen? Do you have a little bit of XRP? Do you have a little bit of whatever coin it is that you identified or you liked for whatever reason? There's a lot of different markets out there, from Web3 to gaming to AI. Like, these little narratives come and go, and I don't know. I really am a fan of all of crypto, and when there's opportunity and you can seize it, you can then support projects and founders that you know and you care about.
Well, thanks a lot for having me, man. I appreciate it. It's been awesome. It's
Yeah,
great
bro.
chat. I'll be showing this for a couple days on Twitter. Hopefully some people stop in and watch the rebroad.
Awesome, bro. Appreciate it, and hopefully we can do it again.
Yes, sir. Thanks, Lindsay, too, in the background for setting this up. Appreciate you.
Yeah, I'll tell. I think she ran out to grab the kids, but when she's back, I'll tell her you said thank you.
All right, you bet.
All right, guys, like, share, subscribe. If you're not following Axis, go check him out. He's dropping that alpha every day.
Cheers, guys.
See you guys.